Investing in real estate can be a lucrative venture, but there are many factors that can influence your success. In this video, we'll be using our experience as a property development business to give you some tips on how to make money from property development. Let's start at the beginning of the project with site acquisition. The cheaper the development site, the higher the profit margin. So what are some tips to buy great sites for a bargain price? Timing the market to buy low is the most common strategy to buy a development site, but it's easier said than done. Understanding market cycles is crucial when it comes to timing the property market. By studying historical trends, you can identify patterns and gain insights into when the market may offer favourable conditions for purchasing property at a lower than normal price. Keep an eye on indicators such as interest rates, job growth, population trends, and government policies that can influence the market cycle. Also, keep an eye on supply and demand dynamics, which directly affect property prices. Monitoring housing stock levels, new construction projects, and population growth trends can give you an indication of whether there is an oversupply or undersupply of properties in a particular market. But timing the market isn't the only strategy. You can buy cheap properties regardless of market conditions if you look for vendors who want to sell quickly. Distressed sales occur whenever homeowners face financial difficulties or other circumstances that require a quick sale, often resulting in properties being sold at discounted prices. But how do you find distressed properties? Search for properties online using filters and keywords such as foreclosure, bank owned, or mortgagee to narrow down your options. Try setting up alerts on Google or real estate platforms to be notified about new listings that contain those keywords. This is also where it's helpful to have relationships with real estate agents. They often have access to off-market listings, including pre-foreclosure properties or those in various stages of distress. Regardless of whether you are buying from a distressed vendor or a normal sale, it's vital to negotiate effectively. Negotiating with the vendor is a crucial skill. The art of negotiation can help you secure a favourable deal and potentially purchase a property below its market value. Before entering into negotiations, conduct thorough research on the property and its market value. Compare prices of similar properties in the area and gather information about any potential issues or drawbacks that property may have. This knowledge will empower you during negotiations and enable you to present a compelling case for a lower price. Also, try to learn what the vendor's motivations are. As we covered with distressed sales, the vendor may be willing to take a price hit if you can settle quickly, or maybe they are adamant about the price but are happy to wait for a longer settlement. By learning what the vendor wants, you can use that to your advantage when negotiating. And our last tip for this category is to be prepared to walk away. Demonstrating your willingness to move on sends a strong message that you are serious about finding the best value for your investment. This approach can prompt the vendor to reconsider their position and potentially open the door for further negotiation or a better counteroffer. By following these tips, you've hopefully acquired a development site for a bargain price. Now it's time to figure out how you can maximize site utilization. Here are some things you can do to make sure you're making highest and best use possible out of the land. You should engage a licensed professional to conduct a detailed site analysis. They will evaluate the topography, existing structures, soil conditions, utilities, and any environmental constraints. This analysis will provide insights into the site's potential and limitations, enabling you to make informed decisions about how to best utilize the available space. When you run out of the width and depth, it's time to add height and build upwards. Consider the feasibility of a multi-story construction or incorporating features like mezzanines or loft spaces. Vertical expansions allow you to accommodate more units or functions within a limited footprint, but it's important to check what height limits are allowed by the zoning overlays your development is in. Another tricky aspect of zoning requirements is parking. Make sure to optimize parking and transportation by exploring various parking solutions, such as multi-level or underground parking structures through basements. Additionally, consider integrating alternative transportation options like bicycle storage facilities or connections to public transit to reduce parking demands and make better use of the site. But the last tip we have for this category is the most important. Engage design professionals to help you maximize usage of the site. Collaborate with architects, engineers, and other design professionals to develop a site plan. Their expertise can assist in designing efficient layouts, optimizing building placement, and most importantly, ensure compliance with local regulations. Their input will help you make the most of the available area while ensuring functional and beautiful designs. Once your development has been designed, it's time to talk about how you can get it built while keeping the price down. Reducing costs is essential to maintaining a project's bottom line. Every dollar you don't spend is an extra dollar of profit at the end of the project. So let's explore some strategies you can employ to keep costs down, starting with value management. Value management refers to a process where a developer maintains the final sales price of a project while minimizing costs. Basically, if you can cut a cost without it affecting the sales price, you should. But if cutting the cost will impact the value of the project, it's probably not worth it. Construction is going to be the biggest cost incurred, so work with your consultants and the builder to identify cost-saving opportunities. This is another case where having the right experts involved in the project can make a world of difference. Their knowledge and insights can help identify potential cost savings, value engineering opportunities, and innovative design solutions. The second biggest expense you'll face is holding costs, which is why it's important to complete the project as quickly as possible. Completing the project faster reduces the amount of holding costs that you have to pay. Loan repayments, council rates, land tax, insurance, and utility charges all chip away at the profit within a project. So it's essential that you have an effective project plan in place that outlines all the necessary tasks. Break the project down into smaller phases, each with specific deadlines. This structured approach will provide a clear roadmap and ensure the project progresses smoothly and efficiently. Where possible, use parallel workflows to work on multiple steps at the same time. Instead of waiting for one task to complete before starting the next, identify areas where tasks can overlap or be executed at the same time. When it comes to project planning, it's also important to consider peak debt. Managing peak debt is a crucial aspect of property development, and reducing peak debt can save a lot of money in the long run. By minimizing the highest level of debt during a project, developers can reduce financial risk, improve cash flow, and enhance the overall profitability of the venture. So how do you keep peak debt low? By having a financial plan in place. Thorough financial planning is essential for managing debt in property development. Before starting a project, create a detailed budget that accounts for all costs, including land acquisition, construction expenses, permits, professional fees, and contingencies. A comprehensive understanding of the project's financial requirements will help you develop a realistic debt management strategy and minimize peak debt. Now we reach the moment of truth. Your project has finished construction and it's time to sell. You've been spending money for years and now you get to start making it. Let's talk about how you can sell for the highest price possible. There are many things to consider when the time comes to sell. In the competitive world of real estate, effective marketing campaigns are essential for generating leads, attracting potential buyers or tenants, and ultimately closing deals. Running a well-executed real estate marketing campaign can significantly impact the success of your property listings and increase your chances of achieving your desired outcomes. Develop a clear and compelling value proposition for your target market. Highlight unique selling points such as location amenities, affordability, or investment potential. A well-crafted value proposition will differentiate your properties from the competitors and resonate with your target audience. Your marketing campaign will also be influenced by how you are going to sell your project. When it comes to selling a property, homeowners have two primary options: auction or private sale. Both methods have their advantages and considerations, and understanding the difference between them is crucial for making an informed decision. Auctions create a competitive environment and potentially lead to higher sale prices, but they carry risk if the property fails to meet the reserve price. Private sales offer more control, flexibility, and privacy, but require effective negotiation skills and may take longer to secure a buyer. Regardless of how you choose to sell, you have a vital decision to make. Which agent do you engage? Engaging the right real estate agent is crucial to ensure a smooth and successful sale. A skilled and experienced agent can help you navigate the complexities of the real estate market, attract potential buyers, negotiate effectively, and maximize the value of your property. Look for a real estate agent with a solid track record of successfully selling properties in your area. You should also ask for client testimonials and check their reviews or references from previous clients. Feedback from past sellers can provide valuable insights into agents' professionalism, work ethic, and ability to achieve a desirable result. But if managing your own property development project sounds like too much effort, don't worry. You can always invest in someone else's development and achieve a return that way. The model we use here at Lion is to raise capital from investors and use that capital to undertake a development on their behalf. We then use the proceeds from the project to pay them a return on their investment. This allows investors to access the lucrative returns of property development, but you don't have to do any of the work. For more information about our model and our current development opportunities, visit the latest offer page on our website.